Hi there and welcome to another episode of Behind the Data with me, Alastair Hope, where for the next couple of minutes I'll be taking you through some of the movements that we've seen through gas and power prices over the last month. So we'll start off with gas, and as you can see on the charts here, continuing to see some downwards movement from the start of the year and over the course of the last month. Bearish fundamentals at the prompt are really starting to weigh on the front of the curve, as you can see. Lots of LNG coming in from the US, also from Qatar. Lack of demand from South America and the Far East, which is one of the problems we had last year, as well as relatively mild weather for this time of year so far, and not the extended winter that we had last year. So more gas is able to go into storage and in supply, generally speaking. Moving on to power, and where gas prices go, power prices will normally follow. There's a little bit of added risk in the power market because French nuclear availability has been pretty poor through Q2. And the risk is that it might get worse again as we delve deep into the summer, especially if it gets super hot. But at the moment, we are still continuing to see that downside in the power prices, with coal prices also starting to soften a little bit as well. And on to carbon. Carbon's actually seen some pretty strong upside over the course of the last month. There's risk that more coal might be needed to be used over the course of the next year or so, if the countries start to move away from Russian gas. And Germany have extended the life, or trying to extend the life of some of their coal-fired plants, and with more coal generation and less gas generation, more carbon permits might be needed. There might also be as well some US hedge funds starting to return to the European carbon market from a speculation perspective as well. And finally onto oil, looking at the graph once again. Upside seen over the course of the last month and also from the start of the year. The oil market still seems relatively tight from a supply perspective. There has been one or two phases of downside in the oil market, with some of the lockdowns in China starting to cause some concern, but ultimately the forecasts still suggest that the oil market is quite tight, and obviously as well with possible embargo on Russian oil looming, that is adding more concern to the picture as well. So what does this mean for businesses moving forward? Over the last couple of months, we have seen some downside, but we're certainly not out of the woods yet. The further dated products have been buying up quite quickly as market participants race into the market to get extra protection. And prices are still way far higher than where they were a couple of years ago. Must be pretty scary for a lot of businesses out there who haven't hedged further out. So please get on the phone to your account manager, get in touch, and we'll see what options we can put on the table to help navigate through the next couple of years. I hope you've enjoyed this market update, and I hope you found it informative, and I look forward to chatting to you again next time. Thanks very much.